So first of all, let me thank the EPP group for organizing this timely event and for having confidence on me moderating this first panel. I'll promise to stick to my role just as moderator, so I'm typically of large speeches, which is not normal in this parliament, but I will refrain this case because we have real experts, people that really know from the market, people that are touching the ground, how things are, how things can be, and how others are trying to get the same ultimate goals and different strategies. So we have as panelists today, Lydia Kurz. Sorry if my pronunciation is right. Kurz. She is CEO at BX Digital and Centurion Börse. Is that okay? More or less. Okay, thank you. Which is a Stuttgart tokenized asset entity, if I'm not mistaken. We have Floris Lucht, okay, from Kivalis, the CFO of Kivalis, Chief Financial Officer, which is basically a joint venture of a European banking consortium devoted to the launch of a euro stablecoin in the coming months, if I'm not mistaken again. And finally, last but not least, we have Johannes Wirtz. He's a partner in a law firm called Bird & Bird, and he has, the broad vision of all the legislative aspects that might be associated with tokenization. I would like just very briefly on my side to fully endorse Marcus' words in the sense that, to me, at least personally, this is the last frontier or the ultimate frontier of financial markets. The potential is huge in many dimensions that we are trying to reap the benefits with other strategies maybe for the last 30 years. So we have a challenge in Europe in terms of market integration within Europe and vis-a-vis the rest of the world. We have a challenge in terms of efficiency and cost reduction. Potentially, DLT technology, or more broadly tokenization in any shape or form, has, in my view, the potential to help us quite dramatically in these aspects. But the question is how to do it and whether you share this view or not based on your practical experience. So my first question is as simple as that. Do you share this view, and to what extent is tokenization the right strategy to increase efficiency, scope, and an integrated market in Europe? To what extent it can help? So please, who wants to start first? Maybe Fleur. Oh, okay, Lydia, yes. Yeah.
This one here? Okay, perfect, amazing. So first one here, thank you very much for having me. It's very good to have this discussion, and also it's good to have this discussion at this point in time, because I believe we are in a timely situation in the sense that there is the need to act. Now to your question, so it is exactly as you're describing, in a sense that the new technology brings opportunities that we haven't seen before. Just to give you a very easy example. So what does the technology DLT actually bring? It makes the asset itself digital, meaning as opposed to up to how it's now, instead of having a digital registry where you have to enter certain things, you actually have an asset that's digital in itself. So that means you can transfer that asset as easy as if you were to send an email. So making the asset digital is actually the main benefit of the DLT. And to your point, that then ultimately needs to result in higher efficiency in all the processes around it. To give you an example, in post-trade, so settlement. Now you have very complex digital registry. You have central intermediaries that have to actually look at this registry, update that registry, reconcile, have mistakes in them that they have to make right again. Now you just move the asset from one institution to the other. So efficiency is high, is the main benefit of what we are doing here with DLT. And happy to deep dive a bit later on in how that's actually done in the real use cases.
So thank you. Johannes, what's your take on this?
Yeah, I think when we're discussing about tokenization, it's important to focus on what's actually discussed. It's not about introducing Bitcoin as some kinds of payment method. It's not about all these meme coins. This part here is actually on the financial markets, on traditional financial instruments, just based on a new technology. So going back a few years ago in Germany, if you want to issue a security, you need to have it as a paper-based certificate stored with a central security depository. This has been now changed, which is good for the German market. We have now the opportunity to issue it as electronic security or even as crypto security based on DLT technology. But now taking a look at Europe, the question is how that those instruments are then recognized by other European countries. What is the status in other European countries on issuing securities on the blockchain? There are different approaches, and if we want to have one internal market on those things, we need to have a harmonized framework for it. I think we had already great first steps with the DLT pilot regime, but it's still a pilot regime. As you say, it's pilot. It says that it's based, or it's intended that companies can experiment with it. And a few years ago, I joined a panel, joined on the one hand by startups, on the other hand by traditional banking firms. And they said it would not be interested for them, on the one hand, for the smaller ones, because it's setting too higher standards, getting an authorization under the DLT pilot regime. On the other hand, the banks said, we don't want to experiment. That's research and development. That's not within our budget at that moment. This has changed to a certain extent. We see that there are licenses issued under the DLT pilot regime, but I think now is the time to make the next step. And if you want to have the efficiencies from DLT, we need to have it on a larger scale.
Thank you. And now, Mr. Lucht, maybe we want to hear your vision on this.
Yeah, thank you, and thank you for inviting me as well. So yes, I fully agree. Right, it is vital, I think, for the EU to develop a new ecosystem for using DLT technology for new payment and financial market infrastructure. And why is that? Well, allow me to go back a little bit what it's about, and perhaps I'm repeating now for everybody what's already known, but compare it to internet, right? Very familiar for everybody, very successful. And there we actually, not just European, but globally, we managed to develop a common infrastructure, preventing fragmentation globally, and it's been a huge success. The internet is used to exchange information. What you cannot do with internet is exchange value. You can send a message, you can send an email, you can send documents, but those by themselves don't have any value because anybody can copy them, right, or destroy them or do with what the receiver wants to. Blockchain or DLT has solved that, such that an asset that is tokenized or registered on blockchain carries a certain value because only the owner decides what happens to that. So the owner can decide to destroy it or transfer it to somebody else and receive, for example, a payment in return. So blockchain can become the internet of value rather than the internet of information. And put differently, essentially blockchain is one large database that everybody can plug into. And the current inefficiency in today's payment and market infrastructure is exactly that which Lydia mentioned as well. Every transaction goes from institution to institution per today, and that creates huge inefficiency because every institution has its own database, its own source of truth that needs to be reconciled, mistakes are being made, corrections need to be made, all kinds of reporting is necessary. It's hugely inefficient. And if everybody plugs into that one blockchain network, which is one database, you have all one source of truth, and you avoid that all these intermediary steps are needed and that all these corrections are being made. So it's a more robust and efficient infrastructure with settlement 24/7 instantly around the globe. And it enables all kinds of new innovative opportunities like programmability of transactions. So yes, we need to develop that common infrastructure and common ecosystem. Two very important elements to be aware of there. One is indeed to avoid this fragmentation. It's infrastructure, and we need one set of infrastructure on chain, not many different that need to be interoperable. And two, we need as Europe to avoid very much to be dependent on non-EU players. And we see already that many dominant players are coming from the US. So already that's a bit of a threat for the EU. So therefore also making now the bridge to Kivalis, the stablecoin issuer that has been set up by a consortium of European banks. By now it's 12 large banks and more are expected to follow that will join. That addresses these two elements. So it avoids fragmentation. It avoids that every individual bank in Europe needs to issue its own euro stablecoin to serve its own clients, therefore needing interoperability and creating fragmentation. So yeah, just to create one European euro stablecoin standard. And two, by having this European initiative, you prevent the dependency on US fintechs, which are currently dominating globally the stablecoin market in US dollars. And that is sometimes a bit, it is seen, but it's also a bit overlooked as a threat, because why are Europeans not paying in US dollars nowadays? Right? That is because there's no need to. You have your earnings in euro and you make your payment in euro. But also, it's not easy to get access to US dollar because it's expensive, etc., and euro is the norm. Once you have a wallet for crypto assets, it's very easy to receive and make payments with US dollar stablecoins as well. So if there's no credible and trusted euro and European alternative for that, then people will use the US dollar variant. So yeah, Kivalis tries to address that concern as well.
If I may, a follow-up question on we've talked about tokenizing different type of assets and increasing efficiency in post-trading, and now we're discussing about tokenization of money, so which is basically the settlement asset. So typically any transaction has two legs, so the securities leg and the cash leg. To what extent do we need both parts of the transaction to really get the full benefit of tokenization, to have both legs DLT native? To what extent has to be in the same ledger or interoperability? How does it work? How much can we get if we simply tokenize assets but not that much money, or vice versa? How much of the potential we are losing? Please.
Yeah. Well, it's certainly essential to reap the full benefits of DLT, to also have the cash leg on chain. To again make that comparison to internet, you can have e-commerce, and if you want to then make the payment, you can do that by sending a check by mail. That's possible, but it's definitely not as efficient as e-commerce platforms would want it to be, and also the consumers want it to be. So you can have some of the benefits, but like was also mentioned, the big benefit of blockchain is really in efficiency of transactions. So it doesn't make a lot of sense to then move to a different infrastructure to do the payment for that transaction, because that takes away a lot of the efficiencies. Maybe good to add, sometimes because we, as Kivalis, we are issuing a euro stablecoin, so it's seen as that we as banks now have to make the decision, well, stablecoins are the way to go as a standard means of payment and settlement on chain. That is not the case. We believe that there will be multiple instruments going forward that will be very valuable in the development of that European digital payment ecosystem. So stablecoins is one, which are very efficient and can be built very quickly, and for which there is now with MiCAR the regulatory framework, which is very helpful. But another instrument is tokenized deposits, which is also very useful. It's a bit more cumbersome. So what is it? It's just deposits which you have nowadays already on the which clients have with their banks. But as soon as you want to make a payment, it is tokenized, reaping there or making use of the benefits of blockchain technology at that moment in time. But it's more complex because you do have these interoperability constraints there. But the benefit is that it protects the balance sheet of banks, and that is important as well, because it ensures that banks will still be able to provide funding for lending assets which they have on their books, which is of course essential for the growth of the European economy. So to have that in addition to stablecoins is very important. And CBDCs are definitely also a very suitable and important instrument at a wholesale level, at the interbank level, to create more efficiency for interbank payments and, for example, for capital markets as well. So we would like to promote all the various instruments, including stablecoins.
Thank you, Lydia. Johannes, anything to add on this part?
Maybe to add, I believe that stablecoins or any form of on-chain cash is very important for the long-term future or even mid-term, that we go into that direction, that we have on-chain cash, because the ultimate benefits will only be there if you have, as you're saying, both legs of the transaction on the blockchain. However, in the meantime, until we are there, and I'm not just meaning until we have an on-chain cash, because we have very good options for on-chain cash already, but the industry doesn't yet have decided on a common on-chain cash. So until we are there, for those use cases, we are taking this on-chain cash, for this use case, we are taking that on-chain cash. We also need to think of this intermediate time until we get there. How we solved it, so we are a settlement platform, meaning we exactly have those two legs on our platform, an asset leg, which is tokenized, as well as a cash leg. We said that as long as we don't have the cash leg set, we also settle in traditional fiat cash. So on one side, we settle in on-chain cash because we believe that's the future. That's where we are going to go to. But for all those institutions that are not yet ready, didn't decide yet on one, where the industry for a use case didn't decide yet on one, you can still settle into traditional fiat cash. How does that work? It's actually very, very basic. We can already today in European Central Bank money system, you can have trigger functionalities. And I'm not talking about the ECB trials, which are part as well, which are being tried out, how then can develop further. I'm talking about today's system. And we can actually combine blockchain-based infrastructure with today's financial system. So we can link an asset leg, which is tokenized, with a cash leg that is not tokenized. And for a start, for institution, that makes it a bit easier to get into that topic, because you might not all be from that space, and like hearing all those different topics, that's the same thing for the financial institutions as well. You cannot change everything from day one at the same time. You need to change it step by step. So we believe the step or where we see the most efficiency is to put the asset on chain, take the cash as soon as possible on chain as well. Once you have use cases that decided on which on chain cash to use. Once you don't have the cash yet, we simply stay in fiat normal wholesale cash that we have today. So just to add on that, totally agree that that is the long-term goal, but there might be intermediate steps as well, that we don't have to change everything from day one and change the complete financial backend that we have today.
Yeah, perhaps to add on this, we have now the instant payment regulation, which already allows us nowadays to make payments in time. But nevertheless, since as I said in the beginning, it's a question of technology, having this in the same technology, cash and security leg, and then being able to doing it by an atomic swap in the same second without any further mechanisms, just increases the efficiency of the transaction and thereby reduces all those necessary steps which we are currently seeing.
Okay, let me take advantage that you are really in the market. So you are competing both internally with other European players, but also with international players. So where do we really stand in Europe in terms of, we know that in terms of being the first to regulate, nobody can beat us. In terms of really deploying something, where are we? I mean, how we rank? How far are we from the leaders? Or are we the leaders? It's an open question, please.
Yeah, so as you said, we are the first in regulate. Yes, when I see it, my clients, I had a lot of US clients asking very early questions on MiCA. Very interesting on what is possible under MiCA, what's not, how to comply with European laws there. So there we really were good, but the questions mainly came, at least on my desk, from US clients in the first place. European and German clients followed only at a second step. Taking a look at other stock exchanges globally, when I've been to Australia, I think it was 7 or 8 years ago, they were already discussing in introducing a blockchain-based settlement system for their stock exchange back then. I hear from the market that there are a lot of discussions nowadays in Europe and that we are on a good track in this regards. But I think we are internationally compared, there are a lot of countries which are ahead of us.
Yeah, I think we are doing reasonably well in Europe, but we need to catch up with the developments in the US and also in Asia. So we're definitely not front runners. Where I do see a lot of positive movement is obviously in the banking sector where I'm from as well. I do believe that to develop this digital payment ecosystem in Europe, you need regulated institutions to give clients access to those networks, to those new use cases. With MiCAR, we have CASPs now in place, so exchanges and other players can definitely do that. But it's essential that banks take that step as well. And they are starting to do that now. It's a very positive development in my view, but this will take quite a few years for that to develop further. So for banks to be fully ready technology-wise and regulatory-wise to offer those kind of access. Plus, what is missing in Europe is a common view. I mentioned, for example, the various digital payment means. There is, I believe, in Europe still a debate ongoing which instrument is the best. And I think that debate should change to how can we optimally use these instruments and embed them in the current financial system. And there are pros and cons to each instrument, and choices need to be made on standardization, but that requires collaboration and a productive discussion on these various pros and cons, the various risks that are there that need to be solved, which are there. And so far, what I've seen, it's largely a discussion more on, it's a bit of a competition, and then which instrument or which development wins is based on what's happening in the market. And I think if you develop infrastructure, you need to do that more in a collaborative way, and I see that missing still a bit.
I would change my answer a bit depending on which use cases you look at. In the sense of, if you look at stablecoins as an example, I think we are, as said, far ahead in terms of regulation, in terms of it's already in place, so we know how it's being done. It could obviously always be improved, but there is something in place ahead, for example, towards the US. But in terms of the use case itself, then we have massive US dollar stablecoins out there in the market. In Europe, we are lagging, so we don't have the volumes in those euro stablecoins that we have in the US. Then take tokenized assets. We are very, very far ahead in terms of the regulation. Also, again, towards the US, we don't have the regulation comparable in the US that we have in Europe. So we have actually a very good regulation in place as a start. But then again, for really scaling, we are in the great danger of falling behind again. So we can do under the pilot regime, the DLT pilot regime, we can do good use cases. It is a good regime. It's a good regime to start, but it's not a regime to scale. And that's where we lack most when we look at the competition also in other jurisdictions. So if the US comes with a legislation, they won't implement something where you can try out a bit. They will implement something where you can scale. So I would say the thing that's missing in Europe in terms of, if you look at other geographies, is actually a legislation that allows to scale and implementing that with a necessary speed. So the speed is ultimately, that is what counts. So to give you a concrete example, we are ready with our infrastructure to start. We also got to get our license under the DLT pilot regime quite soon. So that's all good. That's all in place. But the one thing we really need is having these limitations lifted, especially on the product side of things, but also the other limitations of the DLT pilot regime. So we can start, we can add a couple of assets on our platform, but we would have players ready to scale with us, to actually bring millions of transactions on the platform. But we couldn't do that under the current regime. So what we really need is you were mentioning it in the beginning, a quick fix where we can scale very quickly. So speed would be required in order to stay in the game.
That leads me, maybe I prompt the question wrongly because, okay, that's where we are. But Lydia has said what is needed to change the situation that we're still catching up. We don't want to be catching up. We don't want to play this cat and mice game. We want to be leading in some segments of the market, maybe not in everything, but at least in something. So what is needed from your side? I think Lydia has been very open and clear what it's demanded from us in terms of the DLT pilot regime, which I would basically summarize as not being a pilot. So just have a DLT regime after careful thinking. But do you agree, or do you think there is something beyond the DLT that needs to be done for us to lead in some market segments?
Yeah, so first, I indeed agree. But second to that, I think there needs to be, and I don't know precisely who is best positioned to do so, but there needs to be more central coordination, in my view. So a central vision of what market standards should be in place, how we can ensure there's a level playing field in terms of regulations across jurisdictions globally, such that we have, such that there's clarity for all market participants on what they can develop, what they can actually plug into. So what kind of tokenization mechanisms do we need? How can we ensure there's privacy? How can CUSPs meet travel rule requirements? What can be the role of the various payment instruments that are out there? And there's many other questions that still need to be resolved. And that requires collaboration, but there's no central coordination for that. So for a lot of parties, it's difficult to step up because they cannot do it by themselves, but to start coordinating that is difficult. So it would be helpful if at a European level that conversation could be started to develop that central coordination.
I think what's also important is that the international private law is more or less adjusted, that you don't have any questions about recognition as a security from a civil law perspective when crossing borders. This is something where, from my perspective, are some uncertainties. And what I think would be great in this part, having a European regime for the issuance of securities on the blockchain as one harmonized framework, focusing on the question, what is the security? When do I more or less trust the technology to give them all the rights I need for security trading, like good faith acquisition and so on? Having those on a European level harmonized would, from my perspective, solve further problems.
Okay, so those were my questions on my part. I don't know if we have some time for the. I think we have 10 minutes for the audience. Do you question, please, Marcus?
Yeah, thank you very much for these insights. As we are discussing now, after we got this proposal from the Commission on the market integration package to expand the pilot project, the DLT pilot project, I'm wondering whether it's still a pilot project or becoming a normal project. And in that sense, what do you think should be improved beyond scaling up to leave the sandbox of a pilot project and to come to a real world with a real DLT project?
So I think the DLT projects are in the pipeline, so they will come. It needs a bit of time until there is the uptake, I believe. So it's not because we don't have 10, 20, 30 of projects applying for those licenses that there isn't any working for it. So I believe they're really coming. It just takes time because although it's a pilot, it's still cumbersome to get the licenses. What needs to be changed beyond that? So you're talking about the scaling topics, which you said, yeah, so they're obvious. The volume limitations, the product exclusions, that need to be changed first. Apart from that, I think it's very important that we look at this technology, that we allow it to change the roles in the market. Meaning there might be the tendency to actually implement the status quo. But the technology allows to change the status quo. And only if we allow it to change it, we can actually benefit from the technology. To give you an example, we have very large CSDs in Europe, but those are national silos. So we have two options. We can keep, with the regulations that we are implementing, those national silos as national silos, or we can actually make a regulation that might limit a bit what the CSDs that are existing today can do or will do, but allow for new opportunities and pan-European opportunities to actually get rid of those silos. So what I'm concretely hinting at that is we might be open to new solutions and limit a bit the solutions of existing players if they want to try to limit the status quo. If they're also looking for a pan-European solution where we get rid of this fragmentation that we have in the EU, then that's good. But those might be two different sides of the coin or two different interests that the parties might have. So really look for or allow for a change in roles and don't see that as a too strong signal against the market.
Yeah, if I can add to that. So I think a lot of financial institutions are quite convinced of the benefits of using DLT for capital market infrastructure. The question is how to get there, right? Because today these markets are enormous, right? And there are lots of checks and balances to make sure that there are no operational losses being made, financial losses being made. There's a lot of risks involved there that are being now mitigated, and it's not easy to just move then to completely new technology. And then I come back to the point I made earlier. I think that does require coordination. So for an individual institution, they can say, well, I do an experiment and I tokenize my bond. That's fine, and then I can issue it, so tokenize it, and then I maybe do one trade to a counterparty, which is often also just an internal investor. That's fine, that can all be done, and that happened a lot. But to create that secondary market, that is a lot more difficult, because if you just do that with a few players, you don't have a secondary market, you don't have any liquidity. You need the whole market to move there. But how to do that, that is the question. So that is one of the reasons why I emphasize the need for coordination. Market participants individually find it difficult to collaborate because they are competitors. So they would like to have some leadership centrally to guide them on how to take those steps that are necessary. That also gives a lot more certainty on what steps to take and where to invest, for example.
When taking a look at the market integration package, I think there are a lot of good points, good ideas in it. But when it comes to the question of is it still a pilot regime, my question would be, why do we need a pilot regime? Isn't there something like technical neutrality where I say, okay, what I actually need is a standard regulation which allows me to choose the technology I deem best for my business? And with that, I think the DLT pilot regime was a good idea back then. But looking into the future, we need one common set of rules applicable on all technologies, irrespective of whether it's DLT based or whether someone wants to have some paper-based certificates somewhere. So I would say what we need is the technology neutral regulation on securities.
Yeah, Michael Verges-Chantes from Euroclear. Hello. I agree with a lot with what the panelists have said. We have discussed a lot about the benefits of having both sides of the settlement on chain, both tokens from securities, both cash. We talk about the options that we have to settle, central bank money, CBDCs, tokenized deposits, etc. But sometimes I feel that we miss to understand that this is not an easy option as it seems like, because sometimes we talk like, okay, we can choose whatever we want. But some financial market infrastructures that are systematically important, they need to prioritize some of the assets for settlement. And that's the case for CSDs, for example, where they are always pushed by regulation, and this comes back from the 2008 financial crisis, that central bank money needs to be prioritized always when practical and available. And today, the regulatory framework does not allow for CSDs to use as a vehicle for settlement e-money tokens. Okay, there is amendments being done, and I disagree with what you said on the national silos, because there are some CSDs that are very big international players, and they have created one of the biggest fixed income markets in the world, which is the Eurobonds, the second one in the world. And they are quite relevant. They are international players, and they operate with 50 plus currencies today in the market. So the regulation today does not allow that if you want to go on-chain, and if you want to do tokenization, and if you want to have the cash part on-chain, you cannot scale projects because, as you know, the MiCA regime is very discriminatory for non-euro-denominated stablecoins. So if you really want to go to down that route and to really create economies of scale like CSDs do today, this needs to somehow to be tackled and solved. So my question is, how can we solve that? And also I agree quite a lot with your last point, which means that at a certain moment in time, you need to create a single rule book, right? So you need to take lessons of why these safeguards have been put in place for entities like that systemically important, how we allow for innovation while still protecting financial stability, and while at that, how can we be technology neutral?
But I think I agree on the point that it goes towards the last one as well on the technology neutrality. As long as the business that, whether it's a CSD doing or someone else doing, it should be possible for the CSD or someone else doing it. Just because it's a different technology, that shouldn't differentiate, right? I disagree a bit on the point that we have in Europe a European infrastructure. We don't. Obviously, we have certain CSCs that are acting across certain countries, in different countries. We have certain use cases, I agree, which are more European than just national. But still, the costs are very, very high. So there is a study that came out last year that we pay in Europe 1 billion per year. The banks pay in Europe 1 billion per year more than we would if we would have one infrastructure as we would have in the US. So we have a fragmentation and it costs us. There might be different ways how to solve it. I agree as well, but we need to solve for it. With our solution, we know how much it costs today to settle. We know how much it costs on our infrastructure to settle. We can save costs of up to 90%, and simply by reducing the cross-border barriers, but also the internal domestic complexities.
Just to quickly underline your point, of course, EMT should be able to be used to settle securities under the DLT regime. Yes.
Yeah, to add on the technology neutrality does not mean that I'm more or less deleting all safeguardings. We need a strong regulation because it's an important sector. That I think is for sure. The question is how open is it in itself, the regulation, and how much is it more or less designed for an old system?
So I would like, I think we're running out of time. There are no further questions. I would like to thank all the panelists for their insight. It's very useful, at least for me. I hope it's also been for all of you in the audience. I've taken some notes, and I've taken also from the public, from your questions, the importance of having wholesale CBDC available, because there are some financial stability considerations. There are other means of settlement. Where we are in the world compared to others, that it's not because, mostly it's not because of legislation, so it's not mostly because we are not properly doing our job here in this part of the city. It's maybe part of it, but it's not the bulk of it. But we need a scale, and that's typically how Americans always win us in each and every market. It's not they are smarter, more intelligent, or it's simply it's at scale. And it's a very simple recipe over and over and over again in each and every market, financial, non-financial. And let's hope we learn this lesson once and for all, and with the opportunity of on-chain, which gives us this potential for scalability. Let's hope, given your talent and those of your teams, we are able to succeed in this endeavor. So thank you very much for attending.